Hello again, everyone. Welcome back. In this technical analysis of the stock market video, I call it Volatility Erupts. We're going to take a look at the S&P 500 ETF, the SPY, and the Qs this week. Check in on a couple of the key indicators, and then that interest rate picture that seems to be all over the headlines because that's what's got everybody's attention this week. We're going to take a quick look at that also. All right, so let's start off here with the side-by-side view of the industrials, the S&P 500 and the Nasdaq 100. The Dow was down 543 points this week. Pretty bearish engulfing type candle, engulfing the entire body of the previous week. The S&P 500 down 103.62. Same kind of picture, almost even more negative, closer to taking out that low of 2 weeks ago. We'll look at that in just a minute. And then the Nasdaq 100 down 434, and same kind of negative picture. It looks like everything is starting to roll over in here. Let's take a look at the side-by-side between the industrials and the transports. The transports have been down now for what, 5 weeks in a row, and actually 6 out of the last 7 weeks. So pretty negative picture. And if you even go back, I mean, we've had what, 2 up weeks since the high in July. We've had 2 up weeks in the transports, and now they've broken down that trend, broken below, closed below that trend line, not just broke it, closed below that trend line. And of course, the Dow did that back over here in early September. All right, that's the side-by-side picture there. Let's go take a look at the SPY. Okay, on Friday, the SPY was down 5.24 points, down 10.31 for the week. So we just looked at that weekly picture on the SPX. Look at this daily picture. Pretty negative picture. And this trend line that I'm talking about right here is the trend line all the way from October. Okay, and yeah, we had that touch point in March. We'll come back to March in a minute when I'm talking about interest rates and the financials. But look how we broke below this trend line, bounced back up. And, we had a lot of things that were starting to indicate that maybe we were going to get a short-term rally, maybe we were going to punch up. And then it just rolled right on over. And the bottom line is, you know, what is it that is the strongest thing in the market? The strongest thing in the market is not an indicator, it's not sentiment, it's price. Price action is exactly the strongest indicator of what the heck is going on. And right now, the last 3 days, this broke down hard. And look out on the SPY, we are literally 1 point away from taking that October 3rd low out in here and heading south. So right now, I'm looking at this as the Elliott Wave picture. I think that we've got intermediate wave 2 complete up in here, ran into that resistance zone back in July. Now we're coming down. Now, the interesting thing about this, it gave me pause initially, is how big a move we had here for wave 1 of minute wave 3. Okay. Well, that implies, I mean, we need 5 waves within minute wave 3 right here. We need 5 waves. That means we got some pretty big waves are unfolding in here. And, based on my estimate, I think we're coming down here into the 382, 383 just to complete this next third wave. But first things first, we got to take out the October 3rd low. Then I think we're going to run into a little bit of resistance where there was a lot of price action that occurred back over here in April and May. And that's why I have the dashed line right here at 411. Wouldn't be surprised at all to see us come down, get some support, and then bounce up to this area right here and then break 3. Now, if this just comes through this like a knife going through butter, then wow, I mean, we are really in for a downdraft, but we'll see what happens. Okay. But this is the path forward. Don't look at this as, this is my estimate for 3. And then of course, I've got an estimate down here from new wave 3, but don't look at that from a timing perspective. This is just a path forward right now. We have to watch for the 5 waves to unfold. So just like, within the first minor wave 1, 5 waves, You know, you need 5 waves in here, you need 5 waves in here as you continue to subdivide lower in here. So that's the picture we've got on the SPY. Let's take a look at the Qs. Okay, the Qs were down 537 on Friday and down 10.68 for the week. It's the numbers are almost identical. Now, granted, the percentage moves higher on the Qs because the where we're at is a slightly smaller number, but in terms of the moves, almost identical to what happened on the SPY. So interestingly strong picture in here. And this trend line, I had drawn this trend line back after Wednesday. Okay, so we're sitting right here, and I said, if this thing comes down and breaks this trend line, that's going to just, to me, add, extreme negativity to the picture that just kind of says, okay, we thought we might be rolling higher. We thought we might be continuing to push for one more thrust to the upside. We came down on Thursday, started to break that trend line, closed right there, and I had talked to my members about this both Wednesday night and Thursday. And then look what we got on Friday as we came down. Now we've taken out slightly fractionally this low. What's this low here? 353.27. And then this September 27th low, 351.36. So we're not very far away from any of those, breaking those. The Elliott Wave pattern I've got on this, the bigger picture is the exact same thing I just talked about on the SPY. Okay. The expectation is that we are in intermediate wave 3 and going to be working our way down. Let me adjust this a little bit, get that lined up a little bit better. So when I look at this, this looks like a base channel, between 1 and 2 projecting out. The expectation is that this third wave, minute wave 3, is going to come down in here like this, break down below this base channel in a third wave, which is typically what you see happen. And so right now we're heading south pretty nicely. Nice strong move that we're getting in here. So I'm looking for this move right down here where it is right about 326, 325. That's my expectation for this to unfold. Then we're going to get a bounce, and then we're going to finish off. And what that is going to finish off, minute wave 3. Then we're going to get 4 and then 5, and we're going to work our way down. We'll see how fast it unfolds in here, and how strong the waves are. But that's what I'm looking for based on the price action, and the price action is what rules. Okay, so that is the picture there. Let's take a look at a couple of indicators. Okay, the VIX up 31 cents on Friday. Pretty strong move in here. And you can see last Friday was the 13th, major eruption. But it's interesting, we zoom out a little bit. We stuck, the VIX stuck its nose above the 20 level. 1, 2, 3, 4, 5 times. Actually, if you count this, 6. And finally, on Thursday, it closed above all. And it's interesting. I had said that to the members too. I said, if we close above these highs, like this high right here, 2133, we close above that, there's a pretty good chance that this thing is going to erupt and continue to push to the upside in here. Well, right now, it has every indication that's what it wants to do. So what's this zone up here? This zone up here that I've highlighted is where the VIX ran into resistance at the key peaks back in 22. Okay, so it's going to be really, really interesting to see how fast do we get up into that zone, and then does it provide the same kind of resistance once we get in that, basically like the 34 to 36 level on the VIX. But right now we're sitting at 21.71. Okay, let's look at the percent of stocks above their 200-day moving average on the S&P 500. It looked like we were about to flip to the upside. Okay. Now it did it on the 50-day. It flipped to the upside with the moving average. It kind of like Flip thought, okay, we're going to get a little leg higher. And now it looks like that's failing. Look how hard that came back down. When we look at the 200-day, it never turned. And now we're sitting and closing below the early October price action in here. And this is the lowest close. I'm looking at my notes. Uh, since November 3rd of 2022. Now, let's just go, let me zoom out. I'm going to show you something. Just for perspective, where are we? And this is the low, yeah, so lowest close of the year, lowest close since November 22. And look at though, when we had the June low in 22, look where we were. And the September, October lows, look where we were. We're not even close to that yet. Okay, so uh, pretty negative looking picture here based on the percent of stocks above their 200-day moving average in the S&P 500. Let's take a look at interest rates a little bit. HYG, the high yield bond fund, continues to say risk off. This has punched below the early October lows in here. It was up 15 cents on Friday, a little pause kind of day. When you look at the weekly basis, let me pull that over here. It was down 82 cents for the week. So here's the picture. That is the lowest weekly close since October, the week of October 10th of last year. So pretty much confirming the risk off type of sentiment that's going on in the market. Now we are getting a little bit of divergence here on the RSI. We'll see if that holds or not. That can easily go away, but we'll watch. We'll keep an eye on that. Well, TLT, wow. Up 47 cents on Friday and down on the week, $4.37. Now, I continue to look at this and say, I think we might have one more wave that's unfolding in here, a fifth wave down. And my target, if I had to put a target on it, would be like here at the 79 level. This implies that interest rates will continue to push higher. Okay, so we'll see if that plays out or not. But pretty negative looking picture here on TLT. And so then when we go back to the moving average view, and then let me take a look at TNX, which is the 10-year yield. And you could see we hit on Thursday, hit intra-week 5%, and then we pulled back a little bit on Friday, but very, very strong move for the week, up 29 basis points for the week. And, yeah, everybody's talking about this is, 2007. We're in the June, July timeframes of 2007 for the highs. If we punch above, I think it's 532 or 536, I can't remember exactly. That is the high of 2007 on the 10-year. We get above that, and then we're back into highs not seen since 2002. So we'll see if this is going to, based on where TLT looks, it looks like we could continue to push a little higher. We'll see what we get here on the 10-year yield. So everybody was talking about the banks on Friday, and the regional banks, they were showing the charts of KRE and the other bank indexes. But, simply all you got to do is look at XLF and see how bad that looks. Look at what XLF did on Friday, down 50 cents, down $1.01 for the week. So the weekly picture is pretty ugly. But when you look at the daily in here, look how we came up. We broke that trend line back in late September, came back up, did the classic kiss goodbye. And what day was that? October 17th, Tuesday, rolled over hard and came down. Now, did we take out, let me see, the low 32.21? We closed 32.20. Okay, so just fractionally below that low in here. It's not a very pretty looking picture. It looks like it wants to head south. So what's interesting is everybody's talking about, refer to March and showing March on one of the indices or something. I can't remember which, but look at the downdraft that occurred back over here in March when we started to have the bank problems that really came to a head. Well, where was the 10-year yield in March? That's what's really interesting about it. Let me go back up, pull it up. Well, the 10-year yield in March was right here, around 4%, 3.9 to 4%, not here. Yeah, we had gotten a little higher, got to 4.33, pulled back, whatever. Then all of a sudden it's like, uncle, the banks were like, uncle, and they roll over And where are we now? So, yeah, it's going to be really interesting to see if anything to the level or more serious develops like what happened back in March. But anyway, uh, this is what was happening with the financials this last week. Uh, Trying to think. Oh, one other thing I wanted to show you. So, given talking about financials, look what happened with American Express, down $8.05 on Friday. So the third Wednesday, Thursday, Friday break, pretty negative. And what was it that American Express said? I'm looking at my note. Transactions slowed more than expected in Q3. And boom, there we go. So pretty negative looking picture on American Express. Okay, that's it for this weekend. If you felt like the video was helpful, give it a thumbs up. If you're not a subscriber to the channel, hit that little subscriber button. And let me change this back to the SPY. And for some reason, I'm not seeing my little thing I'm looking for. What I was going to say is if you'd like more of this information on a regular basis, head on over to joehenches.net. Check out the website, check out the membership. Everyone have a great week. We'll talk to you on the next video.